Chapter 2, Problem 2, this is exercise 2.9 in your text, asks us to prepare a full set of financials based on this information. Well, take a minute and take a look. This company provided services for the year of $35,000. They purchased supplies on account for $6,000. And at the end of the year, there was $18,000 on hand. I want you to think about that for a minute. If they bought $6,000, okay, this is stationery from my old photography studio. If they bought $6,000, and at the end of the year, they had $18,000, how much did they use? This is the real basic algebra I was telling you about the other day. It's 6,000 minus X equals 18,000, or 1,800, I'm sorry. So all we need to do to get it by itself is take 6,000 minus the 1,800 equals X. So that's how much we used. We're going to need to know that number. Okay, so they provided services for cash. That's revenue, $35,000. They purchased supplies on account, $6,000 on account that they didn't pay them yet. That's an asset and a liability. And then they used, let me bring that $35,000 over to retained earnings, because remember, like we said, anything that happens has an immediate impact on retained earnings, even if we haven't done the financial statements yet. And we used some supplies. We used the $4,200 that we just computed, and that's an expense, so that reduces our retained earnings because it reduces our net income, which reduces our retained earnings. So at the end of the year, we have $35,000 in cash. Notice we haven't paid anything. We must have some very trusting and generous creditors. So our supplies on hand at the end of the year is $1,800. Our accounts payable is $6,000. And our revenue minus our expense is our net income. In this case, it's also the total change in retained earnings. So that was the first thing it wanted us to do. So that's part A. And then it says, okay, smart guy, do an income statement and a balance sheet and a statement of cash flows. I know it sounds daunting to you. You haven't done one of these yet. It's really not so terrible. Our revenue was $35,000. The only thing that goes on an income statement is revenue and expenses. Nothing else. So we had $35,000. We used up $4,200 worth of expense. Our net income is $30,800. Remember, who owns that? The shareholders. So that's going to go to our balance sheet. That's going to go to retained earnings. So now let's do our balance sheet using the same numbers basically. Our balance sheet is cash. If you look, by the way, up to the top here, that really is the balance sheet equation. Okay? So, let's do it. Our assets, $35,000 cash. Our supplies, $1,800. You see where these numbers are coming from, okay? Our liabilities are our accounts payable of $6,000. And our retained earning was our income for the year. It's our first year, $30,800. Retained earnings, $30,800. So, our total assets, $36,000. Make sure I'm getting the right line. And our total liability and equities, $36,800. These two numbers balance. We're good to go. Now, the next one seems a little tricky because it's a statement of cash flows, and you heard from your friends who took Accounting 1 or who are accounting majors that cash flows are tough, blah, 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 blah. Not really. I'm asking you, reach in your pocket and count your money. How much cash did we receive from our customers? $35,000. If we did nothing else, that's how much we would have left over from our customers. Investing activities. They're things, if we buy property, plant, equipment, stocks of another company, bonds of another company, all of those things are investing activities. We didn't have any of those this year. Our retained earnings is a financing activity, but remember we said that retained earnings is not cash. It could include some cash because it's the total value of the company, but it is not cash. So we have no cash from financing activities this year because we didn't sell any stock, we didn't pay any dividends, we didn't take any mortgages. So our statement of cash flows says that our beginning cash balance was $0, our first year in business. Our change in cash was $35,000. So if we had $0 and we got $35,000, our ending balance in cash is $35,000. Okay. Now, the next couple of questions are kind of, let's see if they can pull a gotcha on you. What is the balance of the supply account as of 1/1/19? I want you to think about that. But think about this, 1/1/19, isn't that the day after 12/31? And if the balance in the supplies account on 12/31 was $1,800, what do you think the balance the next day is? Okay? It's $1,800. The next one, now that's the supplies on hand. That's the supplies account, not the supply expense account. That's supplies on hand. Very different from supplies expense. That's this guy. Very different. The supply expense account on 1/1/19 is $0 because at the end of the year we close everything to retained earnings and start new for the next year.